Hey there, welcome to the channel. So today, just kind of a little stock market update. Kind of got beat up today. The market kind of got beat up. So we have the SPY down almost 3%, really strong, strong down bar there. And we could see that, last week we had we had a couple strong days there. Look at that strong reversal day and then had almost like a follow through on it. But the thing is, it looks like it gave it all up, or not all of it, but it's given up a big chunk of it now. And so that's kind of typical for bear market action. When you're in a bear market, you have these really strong days. And the reason it's so strong is because you have people that are short. And when they decide to cover, either protect their profits or avoid losses, since they are exposed, right? If you're short, you have infinite exposure. So for example, if you're long a stock and you pay $20 for the stock, the most you can lose is $20, right? Because it can go to zero and you're like, oh crap, I lost everything. Well, that sucks. But if you short a stock at $20 and it goes to 40, okay, you lost 20, but it could go to 80. You can lose this, it can go to 80, 100, whatever. So basically that's kind of the theory behind it. And that's why I think they kind of move really fast. And that's why you have this characteristic, really, really strong, quick, violent, almost violent up moves that you get in the market when you're in a bear market like this. So that's kind of looks like we saw last week. And you can see now it's starting to give it back up. Really, the thing today, the oil is just getting crazy, right? Look at Brent at 5.7%, just crazy and very volatile too. Huge range. I mean, it's up at 5.7% up for the day, but it went as high as 140. I mean, just huge range on that thing. And the problem with that is that one book you can look at is the oil factor. It's an old book now, so you actually probably get it really cheap. But it was a book, and what they did is they kind of just tracked like changes in oil price. And basically what they found is if the oil price changes too quickly, goes up too quickly, it can go down, that's fine. But it goes up too quickly, you basically induce a recession. And that kind of makes a lot of sense. So what's happening here is in the background, before the whole Ukraine thing happened, what's really going on here? We have the Fed coming out and they're going to raise interest rates. So we're starting to get that kind of pressure on the market. Then we have this whole Ukraine thing, and we have, oil is supplied, Russia is a major producer of oil, natural gas, energy, all this stuff, and all the disruptions that are going on because of this invasion in Ukraine has caused a situation where our oil prices have spiked. Now, the oil price spiking, is that mean that the Fed can back off on interest rate rises? Well, there's two forces at play. Force one is, first of all, the price of oil going up is highly inflationary because in the short term, for sure, it is causing the price of everything, every service, every product you buy, everything is going up because of the price of oil. And the issue is that there is sort of a lag time. So when the price of oil is going up now, that means in the future, you're still going to have that inflationary pressure. So whatever it is, so let's say it takes some time for oil to go down, what you would still have is you would still likely have inflation continuing to go up for some time. There's going to be a lag there because basically the cost of oil is going into the cost of those goods, et cetera, et cetera. Now, on the other side, there's a deflationary side because basically what is the purpose of the Fed raising rates? If the Fed raises rates, what is that going to do? What is that going to do? Well, that is going to slow down economic activity. And the idea with slowing down economic activity is that you're going to reduce the inflation. So taking inflation as measured as an increase in prices, price goes up if the demand goes up. That's pretty simple. So that's kind of the idea behind it. So you have these two forces at play. So it's possible that, the Fed may not be able to have to raise rates as much, but the counter is that you have pretty much as a guaranteed. When you have price spikes like this, you're going to get a recession. So now they have to navigate that kind of disaster that's going on. Also, the Treasury yields kind of been going down now. And of course, what's going on here? It's just basically really common. If the stock market is selling off, then the yield goes down because people have to, investors have to if they're going to take money out of stocks, they're going to put it in bonds. They really, they're sitting here and they have like stocks, and they're sitting here and they have bonds. And if they're sitting there and they want to protect profits and sell some of their stuff, they're not going, all the way. They can go to some cash, but a lot of these guys, they're just not going to go to dollars. They'll put a little tiny bit there, but bigger chunks will maybe just go to bonds. And so that's kind of what you see. You see money moving into bonds, hence the price of the bonds goes up and the yield goes down. So we definitely have that going on right now. So it definitely looks to me like bear market. And, I really wonder, like ARK Innovation Fund still getting beat up. I mean, it's at lows. It broke a new low here. See that? I don't know if you can see that very well, but look at it. The wick did break into a new low. So that's really kind of bad over there. But the thing is, this thing is so beat up, at some point it's going to turn. But the question is when. Let's look at the Ukraine situation. So here we got wheat. Wheat is just going through the roof. This is a bad thing. And I'm looking at a weekly chart here. Let's look at a daily chart. So yeah, so it went up 6.5% just today. Crazy. Now, this one's really kind of insidious. You're talking about wheat, and wheat is, a base product for many foods. So it's really problematic, because what this means is the price of wheat going up means the price of food's going to go up, all kinds of food. And like in the US, it's not as much of a big deal for people. Yes, we spend a lot on groceries, and that certainly it is going to mean groceries are going to go up, and that's of course a problem. But on the other hand, the problem is that this goes to countries that are poorer countries, where people don't have as much money, where people are spending a lot of more of their whatever income they have on food. In there, this is really problematic. This is a situation where, look, this is called people starve, and so that's really unfortunate that this has happened. Hopefully it doesn't last too long, but it's a problem because Ukraine is a big wheat producer. They're the breadbasket of Europe. They're this huge producer of wheat and grains. So that's another side effect of what's going on. So there's, when you look at this stuff, there's a lot of stuff going on here under the surface that is really not very bullish right now. Now, looking at gold too, gold is just going up too. I mean, this is like, I had shown this before, and it's like, you kind of have this huge wedge thing here. It's just a consolidation pattern. It's kind of like a wedgie consolidation, but this thing broke out like 3 weeks ago or something. 1, 2, 3, 4 weeks ago from this, and it's really starting to move now. So that's kind of interesting there. Let's look at what the dollar is doing. And I'm just going to look at the UP ETF here to kind of get a feel for what it's doing here. Clear all drawings, and I want this one. Yeah, so looking at the dollar, we had this really huge base, right? Huge base breakout. So, you're talking stuff like a year plus base, and, we're continuing. See, it's very interesting. See, look at this thing. You look at it, and we had these kind of we had multiple weeks of this sell-off lows, and we tried to break out here on this day, and then it just had that hard sell-off. But now we're pushing up. So back to one of my other charts is, look, dollar and gold are going up together. And yes, it doesn't make sense, but that can happen. And we've seen that in different parts of history. Dollar and gold can move up together. All right. So just a quick on the Ukraine situation. We've had this interesting thing. Russia is apparently just taken under face value. They're offering demands. They're saying, hey, we can stop our military operations on a moment's notice, but you got to do this. Ukraine has to stop military action, has to change the constitution to reject entering any bloc, specifically the word about NATO and EU, and then recognize Crimea and also these breakaway regions as independent states. So basically Crimea, they're saying, acknowledge that that's Russian now, which it was since they annexed it. But they want them to acknowledge that, and they want them to acknowledge these independent states of Luhansk and Donetsk over here. And then you go to the map, this is the breakaway region over here. So on the surface, you would look at that and say, well, that seems like something that could stop this, right? You could turn this off, because if the government in Kiev said, okay, fine, you know what, let's do that. We'll agree to that. They could really do it. But there's some other stuff that it's harder to figure out, because they're talking about also other demands in there that Ukraine must demilitarize. Well, what is demilitarize? And then there's a statement here, we are finishing the demilitarization of Ukraine. Well, okay, what does that mean? So this is where, like, when you look at it, if really simple things say don't become a part of any EU or NATO, recognize these breakaway regions, which Ukraine really shouldn't want anyways. Like, you don't want, this has been somewhat independent. You've been fighting with these guys since 2014. Just say, hey, screw you guys, we're done. We'll pick a line and you stay over there, we'll stay over here. I mean, it's sort of like a no-brainer, but of course that's not kind of, it's more complicated, because the problem is, what does demilitarize Ukraine mean? That's his code word for what? I mean, like, they're going to keep doing stuff. I mean, it's just crazy. First of all, if Ukraine demilitarized everything, I mean, that agreement would never work, because look, right now, Russia is at least getting a bloody nose. And there has to be an incentive for Russia not to come back in and do this again. And the incentive has to be two things. They got something, worry about the NATO, whatever, they got something there, right? But secondly, they have to be worried that, oh, well, we're going to lose a bunch of guys again if we go in there. So if we really feel we need to go in there, we got to really go in there. And the demilitarization is sort of like, how does that work? That doesn't mean anything. It's like, okay, they can just keep bombing and shelling as long as they want till they figure it's done. Because, you know, first of all, Ukraine, they're going to keep all their weapons, right? They're going to keep all the, I mean, we're going to give them more. We're going to give them more planes. We're going to give them more of everything, which is like, at this point, that's what you have to do. It's like, okay, well, if you're going to get invaded, like, we want to protect you from that. So we're going to give you anti-tank, anti-air, all this stuff. But on the other hand is, you know, an agreement like this, even with Ukraine, like, stuffed with arms, conventional weapons, if they didn't have any missiles, any long range missiles or anything, now a sticky point would be SAMs, right? Ukraine has some surface to air capability, and they would want to keep that, you know, because once again, you need that protection from just like Russia deciding, oh, we're going to bomb you today because we feel like it. You got to have some kind of a counter to that. But on the other hand, putting nuclear weapons there, I mean, I would agree that would not be a good thing to do. So it seems like that would be a good, there's a potential for an agreement there, but just given everything that's happened, and this is sort of the problem, and I don't know what the case is. I don't know if the situation is such that so much has happened now that the people involved will make an agreement. They'll say, okay, fine, this is just getting so bad and out of control, we'll take the agreement, even though they don't like it. Or is it different now where it's like, you know, no, it's gone too far and we're just going to fight the whole way? Because basically, this is setting up for an Afghanistan insurgency. That's what this is setting up. And the West is pouring weapons in too. So, I mean, these, you know, if Russia does come and follow through and take over Kiev and keep pushing through, I mean, they have another Afghanistan on their hands, and it's just gonna eat them up. And it's also just gonna look really bad, because it's gonna be like, you have civilians all over the place. So there's no way you're gonna do things cleanly, let's say. It's just not gonna happen. So I think that's it for this one. It would be nice, I guess that would be the question, speculation. Like, let's say there was an agreement and they actually like had this agreement announced. What would the stock market do? Well, the stock market would probably shoot through the roof. It would probably would, because it would take this pressure off. However, just kind of keeping in mind that we still have the same issue. Before all this happened, we still have high inflation that's running, you know, 7%, 10%. And then after this oil spike, we could have inflation running 10, 12%. So the Fed's still going to have to do something on that. So that's kind of what to watch out for as far as I see. That's my take on it. All right. Talk to you later. Bye.